Good morning, ladies and gentlemen, and welcome to the launch of the 13th edition of the Global Green Finance Index. It's a somewhat chilly spring morning here in London, and over the next 45 minutes, we're going to be sharing the results of our research into the performance of the world's financial centres and their progress in delivering the goods and services needed to overcome the challenges of climate change, poverty, and environmental destruction in order to attain a sustainable future. I'm joined by our Chief Executive and Head of Indices, Mike Wardle, who's going to be sharing our detailed analysis and answering your questions. Now, the format for this question is quite simple. Mike is going to make his presentation, following which we'll have the Q&A session. But I'm afraid you're all muted, but you are able to submit questions at any point using the questions tool, which should be on the right hand side of your screen. I'm going to be collating your questions and I'll put them to Mike at the end of his presentation. We're going to be recording this webinar and you will be able to access the slides and presentation at a later date. And I'm delighted to announce that the full text of the report is going to be available to download during Mike's presentation. It, along with all previous published editions of the GGFI, can be accessed from our Long Finance website. So, without further ado, over to you, Mike.
Well, thank you very much indeed, Simon, for that introduction. You probably know me already. I'm Mike Wardle, Chief Executive Officer at CN Group and lead author on the GGFI. So first of all, what is the index? We launched the GGFI in 2018 to track the development of green finance in financial centres across the world. When we started our research, we included 47 centres. GGFI 13, the new edition, includes 96 centres. And our intentions are very much to encourage financial centres to enhance the range and depth of their green finance offering. The index is a factor assessment index. This means it takes account of two separate sets of data. First of all, 129 instrumental factors. These are quantitative data measures from third-party providers covering sustainability, business, human capital, and infrastructure for all financial centres. And then the second set of data is questionnaire results. We ask financial services professionals to rate financial centres on two dimensions, the depth and the quality of green finance taking place in that centre. Just having a look at who engages with the GGFI survey, you'll see from the charts here we have a wide range of people working in finance across various sectors who get involved in the survey. And a fair spread across the world in terms of people who engage, particularly in Asia Pacific and Western Europe. And the GGFI world is shown here. So each of those marks is one of the centres of the 96 that we track. And there are concentrations, of course, in Western Europe and in North America, but growing numbers of centres focusing on green finance across Asia Pacific and increasingly across emerging markets. So what are the headline results? First of all, London retained its first position in the index, while Geneva and Zurich performed very well to overtake New York, went into second and third places, with New York moving to fourth. Montreal entered the top 10 in this edition of the index, replacing Copenhagen amongst the top 10 centres. So interesting things taking place in North America. Western European centres take 5 of the top 10 places, with US centres taking 3, and Singapore is the only Asia-Pacific centre at present in this leading group. Interesting, the margins separating centres at the top of the index continue to narrow. Among the top 10 centres, the spread of rating is only 13 points out of 1,000, which is very close. So really, when we're looking at the index, we're looking at trends over time and the broad area of the index in which you find yourself, rather than one worrying whether you're second or third or fifth or sixth. Only 9 centres across the whole of the index fell 10 or more places in the rankings, and 4 rose 10 or more places, which is quite a high level of stability in terms of the index rankings. Energy efficient investment, disinvestment from fossil fuels, and green insurance are rated by finance professionals as the areas of green finance with most impact. And interesting enough, until recently, carbon trading was in that list. It's fallen out of the list in this edition. Risk management frameworks, international initiatives and renewables are listed as the major drivers of green finance. So these are the things which are shifting people's views as to why they should get into green finance and why they should move ahead with it. So the top 20 centres, we've mentioned some of those at the top. The interesting thing here that Western Europe has 11 centres in the top 20, 8 from North America and just Singapore from Asia Pacific. So we continue to see the trend that really established financial markets in the Western world are those who are seen to be taking green finance most seriously. And you'll see that Lugano has moved into the index in this edition as a new centre in the index and scores very well, showing that Swiss centres in particular seem to have a clear strength in this area. In the EU, Luxembourg is the top centre, and as we've mentioned, New York fell a few places to 4th. And then looking at the dimensions I mentioned, the depth and quality of green finance in financial centres, you'll see there's some differences. Leading centres score well on both depth and quality, but in some individual centres, one dimension is stronger than another. If we took Montreal as an example, Montreal ranks 5th for depth, 12th for quality, 10th overall in the index, so a little bit of a difference there. And we can track this effect as shown on this slide. Centres such as Casablanca, Kuala Lumpur rate stronger on quality than depth. Others such as Berlin, Shenzhen, Shanghai are stronger on depth and quality. And this is a useful measure for financial centres to think about where they might need to put their effort in terms of development. As well as the main index, we produce different analyses of the data. This one shows an analysis by instrumental factor group. So we take the same responses to the GGFI survey, but combine them only with the instrumental factors, the quantitative measures that relate to these 4 areas of the instrumental factor groups. And you'll see that London, for example, is still first on sustainability measures on business, but second in human capital and infrastructure, with Luxembourg taking first place in human capital, New York taking first place in infrastructure. And again, a good indication of where centres may need to put their effort in terms of developing their green finance offering and where their strengths and relative weaknesses lie. We can also cut the data by looking only at the questionnaire responses that come from people working in different sectors in finance, whether policy, knowledge, investment, or the professional sectors. And again, we see a bit of a mix with leading centres doing well, but London, for example, not doing so well amongst people from the investment community, coming 3rd in professional services, Luxembourg coming 1st in investment, 2nd in professional services, Singapore coming up 2nd amongst investment professionals. So again, reflecting, I think, some of the strengths of these centres and the business in which they are strongest. The next analysis we do for the data is to look at the data using only the responses in the questionnaire to people who are directly working in green finance. And this leads to some interesting changes. So, for example, while London remains top, Geneva, which is 2nd in the main index, when it's judged by those people working in green finance, would actually drop 14 places to 16th. Other centres do well on this analysis. Oslo has a good reputation amongst people working in green finance and would come 3rd on that particular measure. So it's just a different way of cutting the data and may show where some of the strengths are displayed in particular centres. So some headlines for the regions of the world. We've talked a bit about Western Europe already because they do have quite a large number of centres in the top 20. But you'll see a wide range of centres. This is the top 20 Western European centres. And in particular, Paris has come up 6 ranking places in this edition of the index. Berlin is up 5, other centres up 4 places, and Frankfurt is up 9 places to move into the top 20. In the Middle East and Africa, Dubai up 4 places and continues to lead in the region. Other centres generally a little bit down in the rankings, but just worth picking out Casablanca, still the leading African centre, and a clear focus on green finance in Morocco. Other centres, as I say, in this region are generally dropping a bit in the rankings, although in common with all regions, centres are up in the ratings, so there is a improvement, we think, across green finance overall. Looking at the top 20 centres in Asia Pacific, again, most centres have fallen back a bit in the rankings in this edition. So what we think has happened is that Western Europe and North American centres have really been pushing ahead. Asia Pacific centres falling back a bit, therefore, in the rankings, although, as you'll see from the ratings, very much improvement in the ratings across the board. Looking at North America, New York fell a couple of places, but otherwise every centre in North America either maintained its position or rose in the rankings. And that's the flip side of the chart on Asia Pacific, where we'll see North American centres performing particularly well in this edition of the index. Moving to Eastern Europe and Central Asia, again, a mixed performance in terms of the ranking scores, although again, everyone's up in the ratings. Kaunas, as a new entrant, has entered at 64th position. Astana, although it fell a few places, is still clearly the leading centre for green finance in the region. Latin America and the Caribbean, again, a mixed performance, but Santiago moving up to 9 places to take the leading position in the region in this edition of the index. There's some of the headlines. I'm now going to hand back to Simon to talk a little bit about the supplement to the report relating to hydrogen. Over to you, Simon.
Thank you, Mike. Now, each time we compile a new edition of the GGFI, we add a supplement focusing on an issue of concern to the green finance community. And for this edition, we turn the spotlight onto the hydrogen economy. Next slide, please. We asked respondents to the GGFI survey to indicate which sectors hydrogen is likely to replace fossil fuels in as a primary fuel source. And the results of this survey are represented here. As you can see, steel production, chemical industries and power generation came out as the most likely candidates, with shipping and road transport following closely on their heels. Next slide, please. Now, there has been a fair bit of media coverage about the hydrogen economy over the last couple of years, and some of it has been, quite frankly, ill-informed and a little fantastical. So let's start with the basics. When we talk about the hydrogen economy, we're referring to energy delivery infrastructure based on hydrogen. In other words, using hydrogen to replace fossil fuels. The thing to remember is hydrogen is already used widely in industrial processes, particularly for fertilizer production. But what's now being considered is using hydrogen as a transition technology to help with progress towards net zero. In particular, policymakers have been looking at 3 areas which they believe may hold promise. The first is hydrogen as a replacement for natural gas in a domestic context, so for heating and cooking. The second is as a replacement for fossil fuels in transport. And then finally, there's the use of hydrogen to replace fossil fuels in high temperature, heavy industrial processes such as steel making or cement manufacture. So where do we stand on each of these areas? Well, the first thing to remember is that hydrogen is not an energy source. It's an energy storage medium. You have to make hydrogen, and currently the vast majority of hydrogen we use, or about 97% of it, is produced from fossil fuels. This is known as grey hydrogen, and it is very carbon intensive. Hydrogen can be produced from renewable sources, but the process is inefficient. There are inevitable energy losses, and to tell the truth, it makes more sense where possible to use the electricity generated by renewables directly rather than converting it into hydrogen. So, what about the three areas that are exciting policymakers? Well, domestic use is a complete non-starter. Hydrogen's explosive qualities are well documented, and quite frankly, it's a really expensive way to heat your home. Transport uses are more promising. Some manufacturers are already producing hydrogen-powered vehicles, but air transport is going to require a great deal more R&D, including the complete redesign of new planes. Finally, there's heavy industry, and this is the area which appears to hold most promise. Europe is investing heavily in decarbonising steel, and it has already built a number of commercial test facilities. So, next slide, please. Where does that leave us? Well, the most pressing need is to concentrate on decarbonising hydrogen production itself. Once we've done this and we can produce green or turquoise hydrogen at scale, cost is going to come down, and then we can look at uses. I think the survey that I mentioned earlier proves the wisdom of crowds. Steel production and chemical industries are indeed the way forward, with transport applications becoming more feasible perhaps over the next 15 to 20 years, although a great deal more R&D is going to be needed for the air transport sector. So in summary, there are no golden bullets in the search for net zero, but hydrogen does have a part to play, and it may become more important going forward. Mike, back to you.
Thank you very much, Simon. So a few key messages really to sum up. I mentioned risk management frameworks, international initiatives and renewables listed by respondents as the major drivers of green finance. And on international initiatives, the thing to be looking forward to is the new collective qualitative goal, which will set the future requirements for adaptation finance, which will be taken forward at COP29 later in the year. US centres have caught up with green finance. Western European centres had a lead, but US centres have caught up, and Asia-Pacific centres are close behind. And centres which perform well in the GGFI are generally committed to environmental improvement across the economy, as well as in finance, and tend to have a real depth of sustainability skills. So some concluding messages from me, and we can move into Q&A.
Fantastic. Thanks, Mike. Now, I can see that we've got a fair number of questions here. So let's start with this one. We've had 13 editions of the GGFI. What changes have you seen over those 13 editions, Mike?
Yeah, two things. Like, first of all, that point I was making just there, that the focus when we first published the index was very much on Western Europe. Western European centres were firmly in the leading positions. New York wasn't anywhere near, for example, the top 20 when we first published the index. We've seen a steady improvement in US centres in particular, and more recently Canadian centres. So North America has really pushed ahead. And that's partly, I suspect, due to the Inflation Reduction Act and some of the concentration there's been in America on the financing and development of new green technology and green industry. The second point, I think, is the continued improvement across the board. People are doing better at green finance, we think, taking the world as a whole, and that improvement is continuing. And people have, therefore, quite a lot of confidence, I think, in green finance across financial centres in the world. People are doing really good work. The third issue, I think, is simply that people have woken up to green finance as a necessary part of what to do. Green finance has traditionally been driven by government policy. In effect, what makes green finance different from general finance. But we're starting to see people doing green finance because it is the right thing to do from an investment point of view, rather than because they're being told or persuaded to do it by policy. Policy is still very important, and getting the right regulatory structure is a key part of driving green finance. But increasingly, people are seeing the payback for doing green finance and doing it well.
I absolutely agree with you there, Mike. I can remember when I first started working in green finance 20 years ago, the green finance guys were the people in the porter cabin in the car park. You know, those porter cabins have gone, and quite frankly, a lot of those jobs have gone because green finance has very much been brought into the mainstream. It's part of the fold, and those guys have been absorbed by mainstream teams. Which brings me on to another interesting question, which is on skills. Have in the questionnaire we do actually ask about skills, and have done over the last few years. Have you seen the importance of skills rising up the agenda, or is it something which centres appear to have under control now?
The main message we get from people on green finance skills is that they don't go deep enough into the workforce. Younger professionals do tend to have it as part of their background and training. Professional institutions are increasingly building green finance into their professional qualifications. But the gap is amongst older people in the workforce who haven't come up through that mechanism, and may need some CPD to help bring up their skill levels. So skills are still a concern, and when we ask people in the survey about skills, there's a number of people who still say, we need more. The market is by no means saturated with green finance skills, and we need people with those skills to continue to be developed. And certainly, when I speak to financial centres, a lot of them do have plans in place to encourage the development of green finance skills, whether it's Green Finance Institute in London or a very similar actually organisation in Astana in Kazakhstan, or whether it is government action to work with the professional bodies to improve the quality of green finance education in professional qualifications. So it's certainly very much still a focus for financial centres.
Absolutely, and I think there's definitely scope for cross platform cooperation, because I do think that there are a lot of skills, particularly in risk management within the insurance sector, which would be very helpful to share across the wider financial services community. Now, there's a question here about you mentioned earlier on about the difference in performance and depth and quality. Can you explain a little bit more about what you mean by depth and quality, and how these may actually affect rankings?
Yeah, sure. Effectively, the quality sort of does what it says on the tin. It's people's judgment as to how good the green finance is, which is taking place, which relates to things like the range of instruments that are available, whether the green finance taking place is seen as truly green and well regulated, with good information and tracking.
So no
The depth,
greenwashing.
a lack of greenwashing, all of that, yeah. Depth really is about, if you take the whole of a financial market, what proportion, and I'm afraid that proportion is still too low in almost all markets, I include London in that, what proportion of the market is focused on or attuned to sustainability. It is quite low still, and I think we need to face up to that. We need more green finance and more green investment. But in effect, it's saying, what's the balance between green and other finance in a particular financial centre?
Now, you mentioned the importance of policy on the effectiveness of green finance within in financial centres. What kind of changes have you seen with respect to the change in regime in North America and South America? I'm thinking the United States and Brazil on the rankings of those centres.
Yes, I mean, South America, first of all, is interesting. There are various governments in South America who are taking their sustainability commitments very seriously. And as you know, both Chile and Uruguay have issued sustainability-linked sovereign bonds. And they do seem to be driving green finance performance. So, for example, Santiago, I mentioned, is doing very well in South America. I suspect that's because it has government backing in terms of its green finance development. Brazil doing less well at the moment, and perhaps people are looking at the development of the oil industry in Brazil and saying, well, you can't both be green and being doing as much oil exploration as you are currently in Brazil. So these sort of wider impacts are important. In North America, I think, as I mentioned, the Inflation Reduction Act has focused people on sustainability, but also the insurance market in America has had a few shocks and is looking at the data. I mentioned risk management frameworks as being one of the major drivers of green finance, and I think the insurance market is one of those where the risk management framework is demonstrating the need to take action. So I think in North America that's driving. The part of the world we haven't spoken about really is Asia Pacific and China in particular. China at central government level is pushing very hard on green finance. And the president of the People's Bank of China has been very clear that that is the way the Chinese finance needs to move. We wait to see how successful that is, but certainly there's a very strong drive in that direction from central government.
It's interesting to see that there's been an uptick in the number of African centres who are getting into the index now. Do you think we're going to see an increase in African centres resurgence over the next few years?
I think in general, the development of finance in Africa has been a feature. We also published the Global Financial Centres Index, which has had both more African centres joining the index, but also those centres performing pretty well. Africa signed a Pan-African trade agreement a few years ago, and that is, we think, having an impact on the flows of finance in Africa. And in particular, places like Kigali or Nairobi are seeing that there are opportunities to be had of building a reputation as a strong financial centre. And so, yes, I think the only way the developments we'll see in Africa will continue to see more financial centres taking their place on the global stage, but also a gradual improvement. And one of the things they're putting effort into is indeed education and developing the skills, which is probably the biggest area for development in Africa at the moment.
Excellent. You mentioned that carbon trading has dropped out of the consciousness of green finance professionals slightly. Why do you think that might be?
I think carbon trading is now seen as one of the things which is part of the framework across a large part of the world. Obviously, it doesn't yet cover all of the markets in the world. We're only up to about 30% of the world's markets covered by carbon trading. But people are seeing the impact at the moment of risk frameworks and international initiatives as having more impact perhaps than carbon trading. Carbon trading is maybe just taken as part of the scenery now, rather than being the thing which is driving further development.
Now, there's an interesting question here. Developing economies tend to say that the green finance is a luxury product, given the very real challenges they've got in terms of tackling poverty and hunger and so on. How do you think we can get the message across to centres in emerging economies that green finance is a real necessity?
Well, yeah, Equally, I've spoken to other people in emerging economies who are really focused on green finance because they do see that the impact of climate change on many of their countries is very large, and they can see the need to shift the transition quickly, but allowing for economic development as well. And this is the interesting part of the equation for an emerging economy. When you know you still have to develop your energy systems in order to move the economy ahead, yet you also want your long-term future for your energy systems to be green. So we're seeing in Africa, for example, real developments in solar energy, lots of thinking, at least, and development of hydrogen production using green energy, seen as one of the ways forward. And the financing of those is often done, of course, through people in Western Europe, people in America, but increasingly, emerging markets are seeing that they have a role to play, and that the impact of doing green finance well will help them to manage their own transition.
I'm absolutely in accord with you there, because ultimately financial services play an incredibly important role in country development, because they can actually direct the development path down more or less sustainable routes. And ultimately, developing nations can actually leapfrog the unpleasantness of poverty and high pollution, and actually attain a low carbon, high wage, high growth economy without the intervening difficulties of high pollution and poverty. So I think that green finance has an incredibly important role to play, and more small nations should actually look into developing it. I know that I was reading recently a couple of African countries are actually issuing sustainability linked bonds to help with the development process. I think Kenya is one of them. So I think watch this space with regards to Africa and green finance. Now, I've got another interesting question here, which is you mentioned that green finance is still a regrettably small part of overall business for financial centres. Can you give an indication on the dollar value split between green finance and well, what people call mainstream finance?
I don't have figures with me in terms of dollar value. I'll need to go and do some digging into that. But I know the questions come from Hugh Purser, and Hugh, I will get in touch with you after the event. What I do know, if you look at, for example, the proportion of assets under management that are green finance, they are still in the under 10% range, rather than being more than that as a proportion of the assets under management. And that's the thing which has been creeping up, but has a long way to go.
I'd give a politician's answer to that and say that it depends on how you define green finance, because I would say the majority of finance now includes some kind of ESG analysis, because quite frankly it is poor practice not to look at your risks across the board. But so it's the difficulty of labels. So yes, I think you would have to be careful how we defined green finance and take it from there. Now I've got another question here, which is about the impact of policies and politics on investment flows. Do you think that major upsets such as the Trump presidency, Brexit in this country, and the Bolsonaro regime in South America actually impacted on the development of green finance in those areas?
There always is an impact. As I mentioned, green finance does follow political lead, and if you have national politics, it, not driving forward green finance, there is a slowing effect. Having said that, though, even under the Trump presidency, when nationally politicians were not talking so much about sustainability, looking at the West Coast and looking at New York's development, the financiers were saying, but this is the way forward. So even there's been continued development, even when the national policy agenda is not as strongly focused on sustainability. I think the issue here is the availability of finance, both government and private enterprise, and the ability to invest in worthwhile projects. And getting projects to a state where they are investable is one of the things which I think has slowed down green finance over time. And that's most likely the effect. What we don't know yet is the effect of the geopolitical situation, in particular the war in Ukraine. It has obviously been a setback in terms of moving forward the sustainability agenda in that part of the world. And more generally, I think political instability is unhelpful to the green finance agenda. It gives people less certainty that they can look to the long term and make sensible investments. There are other parts of the world, of course, where things have moved out quite quickly. So the development of renewable energy in places like Vietnam and Thailand has really moved on at pace. But again, driven in that case by politicians seeing that is the way to go, and that using natural resources for power is the way to go. And my only other thought on the Ukraine situation, of course, is that it has forced Western European countries to look very seriously at their dependence on oil and gas, and I hope will drive further developments in renewables and indeed in energy storage, which is the other side of that question as we move forward.
Excellent. So time for one final question, I think, which is on disinvestment. You did mention disinvestment at the top of your presentation. Seems to have dropped out of the news a little bit over the last couple of years, but our green finance community still seem to think that it's an important issue. What's your take on this, Mike?
I think increasingly we see very large funds, investment funds, using their investment power to force change in the world. And it's maybe gone out of the news a bit because so much of it's going on again. It's now more taken for granted that if you are a large investor, you will have signed up to the principles for responsible investment. You will therefore be engaged very much in looking at your investment portfolio and how you can move away from investment in fossil fuels. And so I think it's still seen as a very important part of the mix to get finance working in the right direction through using the power of investors. Maybe not so much in the news, and maybe we need to revisit some work we did a few years ago on disinvestment and do an update on where we think that part of the market has moved.
I absolutely agree with you, and away from the PR path, I think that stranded assets are a really important issue. I know that they've hit the maritime sector quite hard, and going forward, I think we're going to see other sectors of the economy really considering how they can decarbonize at pace, and it is going to affect financial markets quite considerably. Mike, I think we have come to the end of our allotted time now. I can see we've still got a couple of questions from the audience. I'm afraid that time has caught up with us, ladies and gentlemen. We will email you directly with answers. The GGFI 13 report is available to download on the Long Finance website, where you can also sign up for more of our webinars. And coming up, we've got the British Isles Share Plan Symposium, which is taking place on the 25th of April. We've got Mastering Misinformation, how stories, statistics and studies exploit our biases and what we can do about it, which is taking place on the 26th of April. And Empowering Personalization and Automated Decisioning, gosh, that's an awful Americanism, on the 29th of April. Now, you can sign up to all these on our websites, where you can also re-watch our previous webinars, and you can also catch up with these on YouTube and our LinkedIn channel. Thank you very much for attending this morning, and I wish you all a profitable day. Goodbye.